and welcome back. This is Stock Rock. Today I am breaking down ADBE, ticker ADB. Guess who? It's Adobe. Adobe came out with their quarter 3 earnings for 2025. I'll walk you through the key numbers, some year-over-year growth, compare Adobe's valuation to its peers, break down the big opportunities and the risk, plus what Wall Street targets this stock from here. So core quarter 3 financials and year-over-year comparison. Adobe reported record revenue of almost $6 billion for the quarter, up about 11% year-over-year. Last year, this quarter, revenue was 5.41 billion. So Adobe's sales growth is still running solidly double digits, even in a cooling software market. Even though, Salesforce did have a good earnings as well, but just kind of wanted to compare. Non-GAAP EPS landed at $5.31, up 14% year-over-year. So profits grew even faster than sales. The digital media segment for the business, think of the Creative Cloud and Document Cloud products, brought in 4.46 billion. This dog is always barking, up 12% from last year. That business is still Adobe's biggest growth engine. Management raised full year guidance. They now expect between 2365 and 23.7 billion in revenue. And non-GAAP EPS up to 20 billion, almost 21 billion, both above prior estimates. Explain year-over-year growth. Basically, year-over-year growth is how much bigger this quarter's numbers are than quarter 3 a year ago. So they help investors compare real growth, not just seasonality or one-time jumps. So you're able to see the jump in growth. I included that in my script just to make sure I broke it down. Valuation compared to peers. Right now, Adobe trades at 22 times forward earnings, considerably below the past few years. That's cheaper than previous highs, but still at a premium to some software names. For comparison, Microsoft trades at 28 forward times, even though Microsoft's pretty much a way different company, but just wanted to give you always got to compare similar companies. While Autodesk is closer to 25x. Market cap stands at roughly 148 billion, with shares rebounding after earnings, but still down roughly 21% year to date, meaning sentiment is subdued versus big tech peers. A lot of the software names are down pretty much similar, like Salesforce. I'm not sure about the other software names. I'm not invested in too many software names. I do like Salesforce. Adobe I'm not invested in, but yeah, so basically this means that Adobe is relatively less expensive than in the past, but risk and growth expectations are also dialed down compared to cloud software and AI leaders. So when a company that's strong and durable, there's always going to be some sort of risk. And if it's trading at a valuation that's pretty favorable, like Adobe is right now, this is your opportunity to buy a company like this, unless you see a lot of risk in the future that you don't like. Adobe's key opportunity is AI-powered creative tools. AI influence annual recurring revenue just surpassed $5 billion. Flagship AI offerings like Firefly, Acrobat AI Assistant have accelerated ARR, already exceeding their 2025 targets ahead of schedule. Uptake among enterprise and marketing clients is trending up with Gen Studio and AI-based marketing tools, booking ARR growth above 25% year over year. The company's AI-first approach positions it to win as customers demand more automation across creative and document workflows. Some of the risks for this company, despite strong results, Adobe's overall stock is still lagging its peers, down 21% this year, while the NASDAQ is up 14%. Competing AI tools from big tech like Microsoft, Canva, and Google could pressure growth and margins over time. Some analysts have cut price targets. Oppenheimer cut to 460 from 500, Barclays to 460, citing slower growth and valuation pressure as competitors close the AI gap. As AI tech matures, Adobe does face ongoing pressure to differentiate, avoid pricing wars, especially as customers test cheaper or free alternatives. There's going to be a lot of different options, especially with AI startups and a whole bunch of AI entrepreneurs going on right now. So you never know when a competitor could pop up. So especially for a software name, software is so easily developed nowadays. But current analyst price targets around 470 with highs near 660 and lows at 280 present a pretty favorable, opportunity for this company with these price targets. Let's pull up Adobe's stock price. Adobe's stock price is around $350, so quite a jump from there. That's about over 30%. Oppenheimer and Barclays recently lowered price targets to 460 while maintaining outperform or overweight ratings, reflecting both growth worries and the current discount to tech peers. Notable highlights from this report: Adobe's AI-influenced ARR stands out. These products crossed $5 billion from $3.5 billion at the end of 2024, a sign that AI bets are landing. Not accelerating super fast, but they are landing. Gen Studio, a new AI platform for marketers, now tops $1 billion in ARR and is growing at 25% year over year, which is pretty solid, pointing to strong customer uptake and performance marketing. Also, their free cash flow margins are robust, but dip slightly sequentially, showing continued discipline, but also hints of reinvestment. Adobe just delivered a classic beat and raise quarter, powered by surging AI businesses and sustained momentum in digital media. Still, valuation is under pressure. Risks remain if rivals catch up with AI futures. Right now, Wall Street sees upside from here. Do you see upside from here? Not financial advice. Thanks for watching. This is Stock Brock. Peace out.